we will talk about some updates to the PPP program. So late Friday night, after we had all gone to bed, the SBA finally gave us what we've been waiting for the last 6 weeks, which is information on the forgiveness piece of the PPP program. And the biggest thing is it was a little bit more complicated than I think we all thought it was going to be. And I know after I took a first glance at it, my brain hurt, and I had to read it over and over and over again to make sure that I was really understanding what was going on. So that's when, we always knew there was going to be, the next step of this program, but we were trying to figure out what it was going to come down to. So the good news is that there were really no major bombshells that came out of this application for forgiveness. We really found, most of the information that we've been assuming and the guidance that we've been giving to our clients and to all of you has been pretty close to being correct. So we did get some really good clarification on a lot of items, which I thought was excellent, from giving an advice perspective. And there's still some more questions that we still are waiting for. We have not seen the guidance that SBA is going to give to the banks yet on how they have to handle this. But we are working, they're working towards that hopefully in the next couple of weeks, as I've heard. So the not so good news about what came out on Friday was that there's still a lot of work ahead to get, your free money. The forgiveness process is not going to be very easy. There is for sure some things that that need to be worked out, and there is a lot of calculation and documentation that's going to go into it, and we'll talk about that. So the other bad thing about what came out was that there are still some things left to be interpreted, and we're hoping that in the guidance that they give to the banks, we'll answer some of those questions, and we'll talk about some of those things as well. So like I said, Friday night, we got our 11-page PPP forgiveness applications. They have been, I think we've sent it out a bunch. It's right online on the SBA's website. You can go to my website. There's links on there. They're, through our blog. If you just Google search PPP forgiveness application, it will pop right up. It's 11 pages long. There are many worksheets and addendums and clarifying information on there to work through. So at the end of the day, the banks will be the ones that are going to be administering this forgiveness program. It's kind of like, underwriting a loan after the funds have been given out. And, some of the banks, just thinking locally, I know Kennebunk Savings did about 800 loans. I think that's, basically 4 years worth of loans for them that they wrote in, a very short period of time, 30 days time. So they've got a lot of work ahead of them as well. And we know that we can start applying for forgiveness through the banks starting on July 1. Hopefully the banks will be ready for everything at that point. They'll have the next 4 to 5 weeks to figure out what they want to do. I know some banks are already starting to put together automated processes to submit forgiveness applications to make their lives easier. And hopefully that will be really good as well. So you can apply for forgiveness anytime after July 1st, but you probably should get your stuff together before then because most people's first payment on this loan does start in November, December, depending on when you get your money. So you want to make sure the banks have time to review your application. By SBA rules, we know that they have 60 days to approve or adjust your forgiveness application. So keep that in mind as you're preparing your documentation. And like I said, make sure you get your ducks in a row now because at the end of the day, they're pretty complicated, and want to make sure that as you're finishing up, hopefully the last few weeks of your PPP loan period, which we'll talk about in a second, you're having the documentation that you need to handle that. So the basics of forgiveness, the program, just as we've always known, is broken down to some basic processes. So the first thing we have to determine is what is the PPP period, and there was always some question about what the PPP period was, and we do now have some guidance on that, which is great. What are the covered expenses? Again, we always had a pretty good idea of what those covered expenses were. That was payroll, rent, utilities, and interest, but now we have some more clarification on what those actually entail and what we can include and what we can't include in there. We always knew we had to keep track of our full-time equivalent count, but we didn't know how that math was going to work, and now we do know that. And the same thing with the wage reductions. Again, we didn't know how that was going to work, and we do as well. You're going to see basically a whole page in that application that says, here's all the backup documentation you need to provide to support these four pieces of information. So there's going to be a lot of documentation. It's going to be a book to give to these banks to get them ready for forgiveness. So looking at the PPP period, we know we are now pretty clear on what this entails. The PPP period begins on the funding date of the loan. And what the funding date of the loan is that's the date when the money hit your bank account. So if you sign the paperwork on Monday and they deposit it on Tuesday, your PPP period begins on that day the money hit your account. It extends 56 days into the future, so 8 weeks into the future. You have all of your expenses and all the calculations, everything we include on that, go 56 days total. So we now know that it's based on a quote unquote cash basis from an accounting perspective. So it's basically whenever your pay date was. So if your pay date was a Friday, if it was a Friday within your 8-week period, that's when it covers. If you wrote a check to Kennebunk-Kennebunkport or CMP or to your mortgage on the first of the month, it has to be the first of the month within that period. It's not when it was earned, so forth. So, that PPP period goes on a cash basis. They also introduced the alternative payroll coverage period. And basically they said, for administrative convenience, we're going to allow you to start your PPP period on the first day of your next pay period immediately following the funding date. So basically, if your pay period, if you got your money on Tuesday and the new pay period starts on Sunday, your 8-week period for payroll only can start on that Sunday instead. And then basically you would include the next 8 weeks of payroll in that. So basically they said if you bi-weekly or semi-monthly pay periods, they wanted you to have a little bit more flexibility on that. But you want to be careful if you're going to use the alternative payroll period, because there are some expenses that fall under the covered period, which is the normal 8-week period. And then there are some, which is mostly just payroll, that fall under the alternative period. So when you're completing your application, you now have 2 sets of dates to kind of keep track of. So you want to make sure you're on top of that. But we did get a little bit of clarity and flexibility there. Let's go back to the beginning and we can talk about what the PPP funds can be used for. So we know that, the biggest piece, this was for payroll, right? We wanted to get everyone back on payroll, off unemployment. We wanted to cover payroll for 8 weeks. That was the idea. So all payroll expenses, all gross wages under $100,000 are included, can be used. That equates to a total of $15,384 in the 8-week period. If someone earns more than $100,000, if you pay them, say their salary is $125,000, you can continue to pay them. However, you can only use $15,384 of your PPP funds to pay for that wage. So anything over and above is on you, basically. And just another point is they have to be paid to U.S. residents. That does include folks with a green card. We did get some clarification on that. Originally, we thought it was just citizens, but now it says permanent U.S. residents, which is nice. The funds can be used for local taxes. In Maine, we only have one local tax, which is Maine unemployment, which is nice. Unfortunately, it cannot be used to pay FICA taxes, so your employer share of Social Security or Medicare, or your federal unemployment. So those are still on the business. So if you got $100,000 worth of PPP money, you still have to come up with $7,600 of your own money to pay the taxes on that. And so that's something that people have been working through as well. You can pay for, within the payroll expenses, you can cover the employer share of group health insurance premiums. And I highlighted group because some people have said, hey, my employees have an Obamacare plan. Can I reimburse them for that? You could put that in wages and reimburse them that way. That would qualify, but you can't just pay right out of your checkbook and cover a non-group health coverage plan. Same thing, you can also include your employer contribution to retirement programs. So if you have a 401k or a simple IRA match, those are included in your payroll calculations as well. We got some clarification, which is really good on the next categories. We always had the payroll numbers. Now we know what interest includes. It says specifically in the application, interest on mortgage obligations. Previously just said debt, and now it even clarifies a little bit further and says interest on mortgage obligations for real or personal property. Real property is real estate, think buildings, things like that. Personal property, my interpretation of that is anything you pay personal property taxes on. So think equipment, desks, all that fun stuff. We'll talk about rent in just a second, but I would consider personal property if you have a lease on a copier, anything like that. All of those will be included. Any equipment in your shop. For landscapers and so forth, I don't think that includes vehicles because those are registered. But if you have mowers and backpack blowers, again, things you're paying personal property taxes on, that would be included as well. So if you're financing those types of things, you can include that interest. It's pretty specific on these next three categories, all of them, that prepayment is not allowed. And we'll talk as we get a little bit later in documentation, but in the documentation, they want you to go back to your February statements and include those into your documentation package when you apply for forgiveness. So they want February statements all the way to the month after your PPP period ends. So they're really trying to make sure you're not prepaying, those types of things. In a perfect world, I guess you would have two payments, of each of these types of things. Same thing with rent, utilities. I think that's what they're looking for. You can cover rent and lease payments. Again, that also is on real or personal property. So if you're renting an office or you're renting a building, you can use that. And again, the personal property, if you have leases on those, I'm thinking copier leases, some people, again, mower leases, things like that, equipment leases, those would be covered. Again, everything before February 15th. We didn't know exactly what was included in utilities before either. It just said utilities, and I always said, hey, well, what are the major utilities? Electric, water, sewer, those kinds of things. They've listed electricity, gas, water, transportation, telephone, and internet. Under gas, I would infer oil would be included in that as well. Water does not specifically say sewer, but most water bills around the country, we don't have that in Maine necessarily, but a lot of times water and sewer are built together. I would again infer that sewer is included. Transportation, I have no idea what they're thinking about with transportation. That one kind of caught me off guard. I don't know if they're including gas or Easy Pass or things like that in there. But transportation is included. I guess that's one still a little bit open for interpretation. Telephone, they have not told us if cell phones are included in that. My interpretation would be yes. Some businesses only have a cell phone now. If you're, electrician, my guess is you don't have an office phone anymore. You've got your cell phone. So I think that is covered. Internet, obviously pretty clear on that as well. So let's dig into the full-time equivalent calculation. So there are many ways to calculate what a full-time equivalent employee is. It's any fractional representation calculating the number of employees you have. Previously, we thought they were going to use the same calculation that they use for a lot of other things, including ACA and other labor reports, which is if you work 30 hours a week, you're considered a full-time employee. They instead gave us 40 hours. They said 40 hours is the number we want you to use. And they kind of went with a very simple calculation, basically said, divide the number of average hours an employee works by 40, and that's your FTE count. So you kind of have to figure out what the average number of employees, what the average number of hours an employee works in a given week and divide it by 40, and that's what they count for an FTE. They've not told us how to calculate that average hours or what period to use it over, so I think that's a little bit left open to interpretation. You basically have to maintain your FTE count from one of 3 periods and compare it to your 8-week PPP period. So the 3 periods that you can choose, you have the flexibility to choose whatever is most advantageous to you. So basically you want to find the lowest number, basically, say, so you can choose February 15th to June 30th of last year. You can use January 1st to February 29th of this year, which I think for most businesses may be the best, given how seasonal our economy is. If you are a truly seasonal business and when you applied for your PPP loan, you use the seasonal guidelines, you can choose any 12-week period between May 1st of last year and September 15th of last year to compare your numbers to. But that is only if you used the seasonal calculations to get your PPP loan. And then you basically choose which one is the most advantageous to you and compare it to whatever your FTE count was during the 8-week PPP period. There's a lot of questions about this. And I know, we're running reports for people every day trying to figure out what these FTE counts are. They did also give us a simplified FTE calculation, which I think a lot of businesses will like. Basically, you can assign one FTE to any employee who works 40 hours or more, or assign half an FTE to employees who work fewer than 40 hours. So you basically take your employee list, and you go down and you say 1, 1, 1, 0.5, 0.5, 0.5, and calculate it that way. That gives you much more flexibility and eliminates a lot of the variables and rounding that you may see if you're doing a literal calculation. Again, you have to provide documentation on how you got all this. The periods remain the same. You choose last year, this year, to your 8-week period, but it's giving you a more, I guess, a simpler way of doing your FTE calculation. There are some exceptions to the FTE counts. So if you made a good faith written offer to rehire an employee during the PPP period and it was rejected, or if an employee was fired for cause, they voluntarily resigned, or voluntarily requested a reduction in hours, you do not have to include these employees in your FTE count for the period. Basically, they automatically stay the same as they were in the previous period. So that's a nice thing. So we know we've had a lot of questions about people that have said, hey, my employees didn't come back from unemployment, or they disappeared. I don't know where people have gone, but people have had employees just disappear and go non-communicado. And basically, if that happened, make sure you document this, but you can exclude them from your FTE count, which is really nice. There's also a safe harbor that they've built in. So if both of these conditions are met, so if your FTE count decreased between February 15th and April 26th of this year, and you fully restored your FTE count to no later than June 30th to what it was on February 15th, you are also exempt from the FTE reduction. So again, you have to document this, but if your business slowed down or closed, and by June 30th, you were back up to 100%, you can go ahead and you basically can prove and say, I don't even need to use the FTE calculation and worry about reduction in my loan or reduction in my forgiveness from that standpoint, which is really nice. So again, document, but it's one less headache. Wage reduction rules. So another piece is they want to make sure that you didn't bring your employees back and pay them pennies on the dollar or something like that. So you basically cannot reduce your employees' hourly wage or their salary by more than 25%. So they want to make sure that owners and managers aren't using up all the money, leaving the little guys out in the cold. It's a 3-step process on the application that it's pretty complicated. They want, anything I think on a government form that says if then, move to the next step tends to be, not so fun. So let's look at what that basically says. So they're saying that you can use the annual salary and compare it to the beginning of this year and divide the first one by the second one. If it's less than 0.75, so basically you reduce their wage by more than 25%, you are going to have a forgiveness reduction. Same thing, you can use their hourly wage or their standard salary, divide those two together, and if it's more than 25% reduction, you're going to see a reduction in your forgiveness as well. This calculation's pretty complicated. I mean, we're working on creating some spreadsheets to try to do this math and try to figure out the best way to do it. I haven't quite gotten there yet, but it's definitely a project to kind of go through and figure this out. Because if you did reduce employee wages more than 25% compared to the period last year, you're basically, what's going to happen is they're going to say, whoops, we're going to reduce your forgiveness by that amount because you didn't follow the rules and you didn't take care of your people. So documentation. This is a huge piece, basically a whole page on the application that says we need copies of everything. They want copies of all your payroll reports within the PPP period. They want the detail. They don't just want the summary reports. They want copies of what every employee was paid in that period. They want you to supply how you came up with your FTE calculation and your wage reduction calculations. So that's going to be several pages. They want copies of your invoices for everything you paid, all the expenses you paid, loans, health insurance, utilities. And like I said, they want you to go back to February and they want 1 month after the fact. They also want any statements from retirement contributions, back up for that. They're going to need a copy of your lease to make sure that you're on par with that. Make sure you're paying the payments according to your lease. We've created for some of our clients, if they own their own buildings, for example, I own my own building and I don't have a lease. I had to write a lease up, basically effective January 1st. It says I pay myself rent X amount every month to make sure that that I'm legal with that. You know, my attorney probably would shame me for not having one before today, but that's what we're trying to do to take care of things. There's also a question, they kind of left this up to the banks, it seemed like. You may need to require copies of canceled checks or check images and bank statements because they want to see when these checks cleared and were written and so forth. They kind of left that up to the banks in the application, and they just said you may need to provide this. There are some tax implications with the PPP that we know about. The IRS gave us some guidance a few weeks ago that caused a little bit of an uproar from some folks. Basically, we always knew that the PPP money, if it was forgiven, would be non-taxable income. But then a few weeks after everyone got their money, they said, well, every expense that you pay with forgiven PPP funds, so all the payrolls that you covered, all the rents that you paid, all the utilities, those are no longer deductible expenses. So in most situations, again, talk to your accountant about this, but in most situations, it should be a wash. Non-taxable money comes in and non-taxable money goes out. They did this to make sure you're not double dipping. And I think everyone thought that they were going to get the benefit of getting all this free money and being able to write off all the expenses and maybe have a loss on their business. And that's not what the IRS wants. I think if, Steve Mnuchin even said, hey, no double dipping. This isn't what we wanted. And, so I don't think that's going to change anytime soon. Want to make sure, because this does have some tax implications, want to make sure you provide all this documentation to your accountant. So before you send it to the bank, make a copy of everything. Make a copy of everything. Make a copy of everything. Put it in a folder to give to your accountant because they're going to need this at the end of the year to make sure your tax return is correct. My guess is one of the ways that they're going to be able to audit this is by verifying against your tax return. And if your tax return is not right, I think that sets you up for even more of an audit risk. On the bottom of the application, it basically says you have to keep all this information for 6 years, and we can come check it out anytime we want. So just keep that in mind. Reduce your audit risk the best that you can. So how am I going to track all this? My recommendation is to start now. You may want to keep a spreadsheet with all your expenses categorized. Ask your payroll company for reports, specifically FTE reports, wage reduction reports. Use what they've got. We have those for our clients, so we can certainly give some of those to you as well. We're still working on other reports that may be helpful to you, but for right now, we do have some reports to give. Your bank may have a checklist. I know I've seen a few of our clients get emails from their lenders saying, hey, here's the application. We're still trying to figure out our process. My guess is the banks are going to try to give you some guidance on this as well, but they're not going to do the work for you. So, talk to the bank as well. You may want to be organized, because this is a complicated process. I think if you bring a package to the bank that's got everything together, looks well organized and well put together, they're going to basically check all the boxes and say, you met the criteria and you're good to go. Again, think about the number of forgiveness applications that they need to process and the time that you are going to take to put it together and the time it's going to take them to verify it. I think particularly with the bigger banks, it's going to be a very black and white situation. I think with the community banks, they're going to give you a little bit more leeway to make sure that you followed the rules, you used the general guidelines, you did the right thing. As long as you followed all that information, I think you're going to be okay, and they're going to grant you forgiveness. But put a good package together. Make sure the banks have everything they need, because if they have to come back and forth with you, they're not going to be very happy. So you may also want to hire someone to organize this for you. We're doing this for our clients and for non-clients. And talk to your accountants. They may be willing to do it for you as well, or your bookkeeper. So now that your ducks are all in a row, you've got all your calculations put together, you've got all your documentation put together, log on to SBA and get your application ready to go. Again, a lot of the banks have also sent out the application to you. They're going to have it on their websites. It's everywhere. It's on my website. It's the hottest document out there this week. I can almost guarantee it on the internet. Want to start working through the application? You're going to want to start towards the back of the packet. Actually, start with the Schedule A worksheet and kind of work your way backwards. The worksheet doesn't have to be on their worksheet per se. You can give any backup that has the same information on it. You basically just need that backup in order to then fill out the actual Schedule A document. And that's the next document that you want to go to. And that is how they calculate any reduction in forgiveness. Then you go back to page 3, which is kind of page 1 of the application, and start filling out the actual application. So they kind of, if I was thinking logically, I would have put these in a different order, but basically the front page, think about the front page of your tax return is just totals, and everything behind it is how you got to those totals, and that's kind of what they've done the same thing here. So probably want to make sure you have your calculator handy because you're going to need it. So we obviously have gotten a lot of questions on this, so I figured I'd throw a few of the commonly asked questions out here. What if I didn't or couldn't spend all of the money? So we certainly have heard this from a lot of people because businesses aren't open right now, so they haven't been able to maximize that money. We've seen some people get creative by adding their spouses and kids and things like that onto payroll for sure. I would be cautious about that, in the event of an audit, but it's certainly something people have done. If at the end of your 8-week period, you still haven't spent all the money, it's not a big deal. You just basically turn around, write the bank a check and say, hey, I didn't use this money. We're going to repay this amount of the loan. And that's what it is. It's a loan, remember, so you can apply for forgiveness, and whatever amount isn't forgiven, you can keep as a loan and pay it off over the 2-year period of the loan. So you don't have to pay it back right away. You can keep it for the next 2 years and do with it what you like and pay it back over time. As long as you're not buying jewelry like the VH1 star is, I think you're okay. Can I give my employees bonuses or raises? Yes, you can. So all gross wages, overtime, vacation time, all that stuff is all included in your payroll calculation. So, if you feel that your employees have been, great through this period, which all of the employees that are working have been awesome, feel free, acknowledge that. If my employees refuse to come off of unemployment, again, remember, we have that safe harbor now, so that's great to use. Make a written offer and make sure you document it, so that hopefully will not affect your FTE count. Refusing to come off unemployment has its own HR issues and questions for sure, but from an FTE count, from a PPP perspective, you don't have to worry about that FTE count because we have that safe harbor now. Can I spend the money on COVID-related expenses? So I want to buy face masks and shields and plexiglass and signs and so forth. No, those are not included in the PPP money. How do I boost my FTE count? Well, first you want to make sure you bring all of your employees back. Make sure that you're getting everyone, even if they're not working, getting them back onto payroll. That's the easiest and first way to do it. Like I said, we've seen some people adding their spouses and children and aunts and uncles and the dog onto payroll to try to get that FTE count up. I don't think that that's the intent of the law, so just be careful with that, but certainly keep that in the back of your mind. Same thing, how do I game the system to make sure my loan is forgiven? You don't. You follow the rules, and as we've talked about here, and if you do everything right, which most businesses, to be honest with you, through their daily expenses are going to come pretty close to spending all the money in the right way. If you're running your payroll and paying your bills as intended, you're going to use most of the money. So just keep that in mind. And what if I don't apply for forgiveness, which is certainly something you don't have to do? This is a 1% loan for 2 years. That's fine as long as you're using it on qualified business expenses. You do not have to apply for forgiveness. I'm not sure why you wouldn't if you're using the money the right way, but it is an option. You don't have to apply for forgiveness if you want to be nice and pay Uncle Sam back. So, if you are looking for help, Paper Trails is offering a service to our clients and our non-clients. I'm non-clients We'll take care of all this for you. We'll track all of your expenses. We'll calculate your FTE counts, wage reductions, put all the documents together. We'll complete the application, and we'll give you a package to give to your bank, to give to your accountant, and keep for your records. We've already got several clients signed up for that, and a few non-clients signed up for it. We're starting to work through that this week to figure out what exactly it's all going to look like. We know we're working before the July 1st deadline to get people on track to make sure that, if they're in the middle of their period, they are on track, and answering questions and so forth, and obviously whatever consultation is needed on there. If you're interested in that, you just visit our website, which is papertrailspayroll.com, and we are happy to chat through what that might look like with you. So that was our quick half an hour PPP forgiveness overview. I guess we'll open it up to questions. Laura, have you been keeping track of the comments?
We have a lot of questions.
Okay.
So I'm going to read some of them, and others I'm going to unmute you or ask you to unmute yourself. And so we have one question that came in privately, and it says, we have remaining funds after covering payroll and utilities expenses over the 8 weeks. Is it appropriate to prepay an employee for COVID-related work planned for this summer and use some of those funds for payroll now so it can be forgiven? Is that within the spirit of the program?
So my interpretation, it does not say anything about prepayment under the payroll section of the application. It does specifically bar prepayment under every other section. So I would assume that you would probably not want to prepay employees for payroll either, just to kind of keep within the guidelines.
Okay. So I've got some questions here, several from George Raftopoulos. I'm trying to find George here, but George, if you are able, we'd certainly like you to unmute yourself because I know you have a few questions to ask.
Do you have to unmute him, Laura? Or?
Well, usually if he tries, I'll get a request. I'm scanning as fast as I can. There are actually 80 some odd people on this call, so it's not easy to find him.
I can't unmute him. I know. I think I passed that privilege on to you.
Yep, I found George. Okay.
Hi, guys. Thank you. Yeah, I wasn't able to unmute myself. How are you, Chris? This is really good. This is awesome. A couple of questions. Profit sharing plan that I know that's accrued from last year, but is that considered retirement if you're paying it and you filed a tax extension?
So I actually just talked to Downey's Pensions about this on another client today. They said, are we able to prepay profit shares or advanced employer matches now within our 8-week period? We kind of put our heads together and basically said we don't think that that's within the spirit of the program.
Okay.
It's really what is incurred within that 8-week period. So if you have 8 payrolls or 4 payrolls within that 8-week period, the matches on those are allowed, but anything outside of that, I don't believe would be qualified.
And if you happen to hire a new employee within the 8 weeks, you can use that employee as part of the calculation?
Absolutely.
Okay, great. Thank you. I'm going to mute myself.
Thanks, George.
Okay, and we have a question from Jean. Jean, I think I just unmuted you, so
Yep.
Did you want to ask yours? Yep.
Well, I had several questions. My first question was about owner employees. My company has 3 owner employees. We all work full-time in the business, and when I calculated our payroll needs, I included those because it didn't say not to. But then I was looking through some of the forgiveness documentation, and it seemed to indicate that you couldn't include that. So I'm kind of confused and alarmed.
So I noticed that, Gene, on the application too. They specifically broke out owner wages on the application. It seems to me that those wages are still included in payroll costs. I'm assuming just from a audit and reporting perspective, they want the owner wages broken out, similar to how they would do it on a tax return. You break out your owner's wages in that way.
Okay.
I think that's how they're doing it. It doesn't specifically say on the application to exclude it, but it is breaking it out now.
Okay. Another question I had, just a general question, is this deck going to be available for us to review?
Yeah, I think Laura's recording this, and I will post this and send it out to our clients, and I think Laura will post it on the chamber website. And I can send you the whole deck if you want.
That would be great.
And
That
just, I'm
would
going
be
to write
great.
myself a note just so I'll send it to you so you can have it. And pretty much everything that's in here is in the email that I sent out on Sunday, and it's also on our blog on the website. So,
Yep.
but certainly, ad-libbing and things like that are in here. So,
Okay, thank you.
This whole presentation will be on the Chamber's YouTube page probably by tomorrow, the latest. So
Great. Thanks.
absolutely. Elizabeth, I just unmuted you as well. I know you had several questions too.
Yes, let's see. One of them was related to the covered utilities. Cable TV was not mentioned. I have a B&B. Cable TV is a utility that we use. It's on my Spectrum bill, and I paid my Spectrum bill, including the TV. Why would that not be forgiven?
that's a great question. It's the same thing with, all the other utilities. Why did they include some things and exclude other things? I don't have an answer for that. I would infer that cable would be included. I mean, they allow you to do telephone and internet.
Okay.
We're hoping for some more guidelines, just like they said you could do water but not sewer. And I think sewer is very clearly a utility as well. So I think, and the other thing that was left out was trash. I think most people consider trash a utility. That was not specifically mentioned. So typically after they put these documents out, they give the banks, a 500-page document that says this is, the nitty-gritty of everything. They've not released that yet. Hopefully once we get that, we'll get some more information on what may be included or excluded and be able to go from there. I would say in your planning process, I think it's safe to include that. The banks, like I said, I think the community banks are going to be pretty lenient on that. I think their interpretations are going to be a little more liberal. I think the big banks, it's going to be pretty black and white, unfortunately, because they have so many applications to go through. So, and again, as long as you have a good relationship with your bank, I think you're going to be okay.
Okay, yeah, because the gas and the oil thing too. I mean, oil is
right.
obviously
Same thing. They specifically said gas, but in Maine, we're probably 75% oil, right? So, my interpretation is, I think that should be covered. And again, that's for planning purposes and for documentation purposes. For all of our clients, we're putting in those types of invoices, and we're going to submit them as covered expenses. And we just have to figure out, where we go from there. So.
Okay. Then another question I had was, so the bill is paid within the 8 weeks, but some of these bills had been accumulating a little bit over the winter. So it might have been for the period January, or I think my sewer bill was from December.
Right.
Is that includable?
So they are going to ask for documentation basically back to February and for the month after. I think you may be able to sneak one or two in there with no problem, but I think if you try to pay 6 months worth of bills, the bank's probably going to say no.
No, it's not that many, luckily. But
right, if you have 3 telephone bills instead of 2 in your 8-week period, I don't necessarily think that the bank's going to have too much heartburn over that. But we don't, until they start taking until they start actually processing the applications, we're not sure.
Right. And then you started talking about, in the FTE, you were talking about specific employees and comparing this employee during a comparative period to the same employee. But then you went on to like a more simplified FTE. So we don't, my employees might be different. Like I did have one that I fired for cause, another one I decided I'm not asking this one back. And I know we're not obligated to ask somebody who was off on unemployment before this COVID started. We're not obligated to ask them back. But we can do the simplified FTE.
Yep, and again, it's really bodies. It's not people. So if you have one housekeeper, if you have 3 housekeepers, and I had 3 housekeepers last year, and I have 3 housekeepers this year, I'm okay. It doesn't matter who it is. Perfect. It's just, I had 3 bodies last year. I have 3 bodies this year.
Mm-hmm. Okay. I think that's all the questions I had.
Great.
Thank you, Laura.
So Marilyn, I unmuted you. I think you have a question as well. Marilyn? Okay. Marilyn Stanley asked if you could include the cost of website hosting.
It does say internet. I think of website hosting more as an advertising expense. I think that's probably how it would be categorized on your tax return. So I don't think that would be included.
Okay. Ashley, did you have a question?
Yeah, I just had a question about now I can't remember what my question was. Oh, I think it was about the wage reduction.
Sure.
Are server tips considered in that? So if they're making less tips now, would that be considered a wage reduction?
I think yes, unfortunately. It specifically talks about annualized. One of the steps is the first step is you have to figure out their annual salary, which again, you calculated the PPP based on their tips and everything. So I think it's something we're gonna have to look at. There is a safe harbor for the wage reduction as well. And supposedly Marco Rubio was talking earlier this week, they're gonna try to put even fewer restrictions on the wage reduction going forward, potentially. They're trying to introduce this bill to simplify some of the forgiveness process. But given that the Republicans blocked Nancy Pelosi's bill, I don't think Nancy Pelosi is probably going to be very kind to give them their bill. So whether or not that happens, I don't know. But I think, that's definitely something that's going to have to be figured upon. We've been advising our restaurant clients to figure out what their average wage was and pay that to them, whether it's an average hourly wage or you're giving them their $6 an hour and then paying them their average tips, kind of, in miscellaneous pay, trying to keep that wage amount as high as you can, because you did get the money for it. You got the money to pay that. So.
Okay, thank you.
Ellen Fontaine, I unmuted you. I know you have a question. Okay. Ellen had a question, and I think you partially answered that, Chris. If a utility bills you in advance for service and you pay it during that period, can you include the full payment as a forgivable item?
I would say yes, because they basically told us to do it on a cash basis. So if you're prepaying, if that's how they bill, I think that's fine. So.
Okay.
Again, my interpretation, who knows what the banks are going to say, but that would be my interpretation.
Okay. Let's see what else we have here. Chris Grimes asked if you could please repeat the dates you need to track for expenses, February end of PPP period.
Sure. So let's see if I can go back to. So the PPP period is 8 weeks from your funding date. So it starts with whatever day the money hit your bank account and goes 8 weeks into the future.
Okay. And Eli, did you have a question?
I did. Chris, this is from Kennebunk Veterinary. You do our
Hi, Eli.
stuff. How are you?
Good, thanks.
Thank you for this. And my question is, we have one employee who was basically too scared to come to work, and there's no judgment on that, but that's the deal. She's been on unemployment, and we recalled her 1 week before she was willing to come back. And our thought was, well, we could just pay her 75%, and then the other employees wouldn't be frustrated that she was getting paid to not work.
Mm-hmm.
And they were putting themselves in harm's way. And but the math associated with that looked pretty complicated. Would you recommend that we continue to do that, or that we just pay her what she would normally make and skip over that math?
So that's completely up to you. I think if you're paying her 75%, you may want to pay her 76% just to make sure you're, within that wage reduction amount. I think that's fair from an HR perspective, from an employee perspective. I think that is fair to do if all of your other employees, except for one, are working.
Okay.
From an FTE perspective, we do have the reduction. She has requested a reduction in hours, so you don't have to consider. You can include her in your FTE calculation. And that shouldn't harm your forgiveness because she opted not to work. You may want to just make sure you get something in writing from her saying, I don't want to come back because I'm nervous for health reasons, just so you have that in the file. Because again, you're going to have to justify all these exceptions. But I think what you're doing is fair from an HR perspective. And I think from, the PPP rules, you're going to be okay.
Okay, and if we're paying you for the documentation service that you're
we'll do all that for you, put it all together.
You'll do the math. Okay.
Absolutely.
Then I'll do what's fair then, as long as I don't have to do math. That's great. Thank you so much.
Great.
Perfect. Quick question from Cindy. If fuel oil is for heating and propane is for cooking, it's a diner. Are they both considered utilities?
I would say yes, they're both considered utilities. I mean, propane is gas, and that's in the list. And again, I think about how do you fill out your tax return. When you do your tax return, you put propane, even if it's for cooking, under utilities. So I would say yes.
Okay. And Chris Grimes, I've unmuted you. You had some questions?
Yeah, I was actually asking about the auditing piece, Chris. You mentioned that we needed to have the documentation to prove all those bills for the utilities. I thought you said way back from February through beyond the PPP period. Did I misunderstand that?
Yeah, you were a little broken up there, but I think you said you were asking about what you needed for documentation. And
Right.
yes, in the application, they are requesting that you submit invoices and backup for any of the expenses that you were paying from February 1st through 1 month after the end of your PPP period. So if you
Okay,
have,
that's what I was looking for. Yeah.
if you have a phone bill, for example, they're going to want the February, March, April, May, and June probably phone bills in your packet.
Okay, got it. Thank you.
Okay, and John Spain, I've unmuted you. You had a question?
Hey, Chris, thanks for doing this. You and I had the pleasure of speaking on the phone about a week ago on the topic I'm about to ask you about, if there's any update, and you may or may not remember.
Sure.
I've been involved. I've signed a couple of petitions about this. I sent a letter to Susan Collins about this. We are compelled to remain closed until June 1st as a retail business. But I'm supposed to use expenses from the date of funding, and I was funded on April 30th. I have brought my employees back as of the 18th, and their first paycheck is coming next week. My question is there any traction in the movement to adjust when the 8-week period happens, or do we take what happened last week to the bank and just assume it won't be altered?
So I can tell you in the bill that Marco Rubio is working on, they are supposedly extending the time you have to spend your money 24 weeks from the 8-week original amount. Again, it's as of today, it's the 8 weeks as it's written in the application.
Right.
Who knows what what Congress will do? Again, playing the political game, I don't hold out much hope for those adjustments, just given the way the climate is. But they are talking about trying to address some of those concerns. Yes.
I mean, I shared a petition on my Facebook page yesterday. If anybody wants to go to John Spain's Facebook page and see this, it's got 50,000 signatures almost from businesses all over the country who say, how do I spend this money if I'm not open? I was compelled to lay people off, and then I was compelled to borrow money before it was no longer available.
Right.
And now I have to spend it on expenses I don't have. I actually brought my employees back early, which I know is the point, to try to get enough expenses in and to do odd jobs and painting and whatever. But I really feel like the PPP 8-week period should begin when I'm allowed to do this.
Right. It absolutely is an imperfect program for sure. And, it's the same thing. Even the people that got their money right away, they rushed to the bank, the day the money opened up and got their money, I think are in a worse position than the people that waited till the second round.
Yeah.
And, certainly, thank goodness everyone got their money in the first round, because we didn't know there was going to be a second round.
Of course.
And there is still money available today. If there's anybody, last I saw, I think there's still $100 billion available in PPP funding if anybody still needs to go get one of these loans. Now that you know what the forgiveness process is going to look like, they've also, just from a few other notes, they've also said anybody that has a loan under $2 million, which my guess is probably everybody on this call, you're basically free and clear of the request for this loan. So they're not going to audit. They're not going to question your intentions. Everyone check the box that says, I need this money due to economic uncertainty. They're going to trust you. If your loan is under $2 million, you don't have to justify that. You automatically justified it because you're a small business. So that's a really good thing as well that they've done to try to help the small businesses. But again, they're working on some adjustments. Like I said, I know Marco Rubio has been kind of leading the charge on that. I've seen a lot of stuff from him. But right now, this is what we've got. We've got 8 weeks starting from the funding date.
So follow-up question. As a result of everything that I just mentioned, I attempted to give the money back to my bank to try to reapply in the second round, and they told me I couldn't do that.
Right, you can only apply once.
Yeah.
Thanks, John.
Thank you.
We have a question from pension professionals, and they should be unmuted.
Hey, Roland.
Oh, I think they remuted themselves. Hold on. Now you're unmuted.
Hi, it's actually Michelle. Roland's not
Oh,
here.
hi, Michelle.
Hi, how are you?
Good.
Are we gonna, I know you probably said this, but I know we're not a member of the Kennebunk Chamber, but am I gonna be able to get these slides?
Yep, I can, my email is chris@papertrailspayroll.com.
Yep.
If you email me, I'll send it over to you. It's also, if you go to our website, just papertrailspayroll.com.
Okay.
On the blog is pretty much everything that's in here as well. But I'm happy to send the deck over, and I can send you the recording as soon as it's done as well.
Okay, perfect. I also, my individual question was how on that first or second slide, you talk about the 100,000 kind of cap for a salary, and
Yep.
you listed like a 15,000. Okay, there it is.
Yep.
How are you arriving at that? Is that for each individual?
Each individual. So you take 100,000 divided by 52 weeks times 8, and you get the 15,384 and some change.
So do you have to calculate that differently if you're on a semi-monthly payroll? So, because I was dividing that by like 24.
No, in the application, I mean, we've always been doing the math this way, but
Okay.
specifically in the calculation, in the application, it says max 15,384 per person in the 8-week period.
Okay.
So regardless of whether you're monthly, semi-monthly, weekly, doesn't matter.
So
15,384
weeks.
per person.
52 weeks times 8, you said.
Correct. So 100,000 divided by 52 times 8.
Okay, that's what I needed. Thank you.
Yep.
Okay, and I had unmuted Amber, but I don't know if she is still here.
Yep, I'm here.
Oh, good. Okay.
So we have some staff who reduce their own work schedule. So maybe they used to work 40 hours a week and they've asked to drop down to 30. So as far as the percentage of their wages, so should we pay them, Chris, at 32 moving forward for the next couple of weeks, or just tell them by the end of the loan I think we have like this payroll tomorrow gets taken out and then we only have one more payroll. So do we say, we need you guys to increase your hours again? What's our best?
Nope. So I think if you, I don't have the application pulled up right in front of me, but if you look at the steps on the application, it says start with their annual salary. If their annual salary was reduced, go to their hourly salary. Was their hourly salary reduced? Which my guess is no, it was not.
Nope, it wasn't.
And so you're all set. So it's
Okay.
kind of a 2-tier. So from an FTE perspective, if they voluntarily reduce their hours, you may want to just, again, get that in writing for documentation purposes. But from a wage reduction perspective, like I said, it says start at annual and then go to, if you don't meet the annual criteria, go to the hourly criteria. And if you didn't reduce their hourly, you're all set. So.
Okay. And then my other question, which I don't know. So telephone, does that include cell phones? Because we're primarily cell phone based.
So my interpretation is yes. I think it's 2020. I think a lot of businesses only have cell phones.
Okay.
Again, I think about the contractors that, work from their truck or whatever. I know in your businesses, you have, give all of your employees.
That's how they work.
That's how they work, right? So
Yeah.
My interpretation is yes, cell phones should be included. We've not seen any specific guidance from that. And again, hopefully when we get the more detailed guidance on the bank side, hopefully we'll maybe see some of those specific things answered. So right now, I think it's left up to the bank on what their interpretation is. And again, I think most of the local banks are going to say, yeah, cell phone, that's a no-brainer. So.
Okay. And then my last question is, I think on the initial application that I filled out for my bank, I don't think it actually said FTEs. It said number of employees.
Right. So that was basically just a data gathering statistic. I think 1 for the banks and 2 for SBA. It has no bearing on your FTE count for forgiveness. I think it was just, they wanted to say, we saved this many jobs in the news, and that's how they did it.
Okay. Thank you.
Yep.
Great. I think we have 2 questions left. Chris, I unmuted you. Did you want to ask your questions?
Sure, thanks. So we have an employee that's out with a doctor's note due to underlying health risks around COVID. And I guess I was wondering, do I need to include them in my FTE calculation, or are they kind of exempt?
So they're going to fall under that reduction exemptions
Okay.
because they've voluntarily reduced their hours. So
Okay.
you already have documentation from the doctor that says they can't work.
Yep.
They basically, you will, they are exempt from that count basically.
Okay, great. Thank you.
Yep.
Okay, and I don't know if Elizabeth is still with us because she had a follow-up.
Hi, I'm here.
Okay.
Thank you. Hi again. So the HEROES Act, right, which is proposing amendments to the PPP and is in legislation right now. For me, I was one of the, I don't know if it's fortunate or unfortunate, who got the loan right away. It hit my account on April 10th. My 8 weeks is up June 6th. By the time those amendments are approved, even if they are approved, right? Like, because one of them is to extend it to the end of the year, even.
Absolutely.
You know, like all my money if could be spent before it's approved. I guess I'm kind of holding out hope that it is going to be approved. So I'm trying not to spend it all within the 8 weeks because basically I'd be wasting it.
Right.
Spending it on things I don't need. So I don't know, what's your gut as far as...
I think you're in a really tough spot. And I think that's, unfortunately, a lot of people are in that really tough spot because again, everyone rushed out, got the money. They were, very, very grateful for it at that time. And we've figured a lot of things out along the way. I guess I would say the rules we have today are what I would base my spending on. Because we don't know if that bill is ever going to get passed, and I would hate to see you not get the full benefit as it's written today. And we know they're not going to exclude any of the rules that we've talked about today because they've already put it out. So I think you're going to find they may become a little more lax on these things, but for the most part, I would say if your money runs out June 6th, use it to the best of your ability to get the most benefit out of it, as if that's all we had today.
Yeah.
So, I know it's not perfect, and but I think it's what we've got.
Okay.
Okay. We have one last question. It's from Sahal. I hope I said that right.
Hey, Sahal.
Hello.
What you got?
Yes, I had a question about business. We are 3 owners, and then when we're trying to do the application first, we calculated our wages towards the application, but we don't run our payroll towards the employees. We do guarantee payments. We write checks for ourselves. Is that also part of the forgivable?
So the guaranteed payments, as far as I understand, for self-employed individuals taking money out and for guaranteed payments, those fall into the same wage categories, basically a max of $15,384 in the 8-week period. So you can include your guaranteed payments and your owner's draws in that as a partnership. Yes.
Okay, thank you.
Thanks all.
We have a question from Sylvester. I keep trying to unmute. There you go.
Oh, I'm unmuted now. Yeah, so the question was, I haven't ran a payroll. We got our funding, I think, April 13th, but I haven't actually ran a payroll yet. Can you use the alternative schedule starting now?
So you can use the alternative schedule, and I think I was talking to Teresa about this earlier. I think that's what we're going to need to do for you guys. But it doesn't give you a lot of time. It gives you basically at the most an extra 2 weeks. But I definitely think that we can do that with you guys to make that work.
Okay.
Awesome. Well, I think surprisingly we're out of questions now. So I want to thank all, I think 82 of you for joining us today. And I especially want to thank Chris for once again just trying to make sense of what is a really, really complex formula for all of this. Again, you should see all of this uploaded to the Chamber's YouTube page tomorrow. We'll make sure we put a link on 3 Towns. And if you have any questions at all, please contact Chris at Paper Trails. And if you can't find him, let us know and we'll connect you. So again, thank you all so much for coming.